Is this a warning sign here?
Yeah, these numbers are lower than most people, including myself, had expected in terms of volume for sales and production. This is a company that the issue has been constraints in production, and otherwise they should be doing better. And if they're not meeting the high level that they expect, that's not a good sign.
Why would you have expected better if you knew that they were facing constraints, for example, with battery supply? I mean, that was pretty well publicized. We also say, even in the Bloomberg story, that we didn't expect them to do better than the 68.92 they produced last quarter. So they did a little bit worse, but that was as expected. And they got 1,000 cars on a boat to China right now. So isn't this basically in line as far as that stuff is concerned, and actually much better on the profit side?
So they have typically beaten their guidance of what they would deliver and produce. So if you go by that trend, it would be reasonable to expect them to do better. I haven't seen the release or heard what the profit numbers were, though. If you could share that with me, I'd be happy to listen.
They were 12 cents on the EPS line, which is the same as the first quarter last year, better than the 7 we were looking for.
They're still saying that they're on track to deliver 35,000 Teslas or Model S's by the end of 2014. Jared, what's your take?
You know, I think this is interesting because the overall market grew at about 7% year over year. And so when you look at what's going on, it doesn't surprise me that the Model S isn't selling at the same rate it did. Because when you look at the growth in the industry, the growth is really coming in luxury, it's coming in truck, it's coming in CUV, and those are segments that Tesla just doesn't operate in.
But it's as expected, right? I mean, we knew that these numbers were going to be what they are. We didn't know that the profit was going to be this high, but of course it's at such a low level that these little shifts don't make a huge difference. And they can't produce any more cars than they are because they can't get the batteries. I mean, isn't that the main problem, that they just can't get a hold of the batteries?
And that's why, Cory, jump in here. I mean, that is why they've been talking a lot about this gigafactory.
Well, a gigafactory, it's not just a factory, it's a gigafactory. I like to think that I'm not an editor-at-large, but a giga-editor-at-large. I don't know what gigafactory means. But I think, first of all, to Matt's point about them making 12 cents, they actually lost 40 cents in the quarter. And they're warning that they're going to be, I'll put it in Tesla's phrase, slightly cash flow negative in 2014. I don't know what that means, but that's what they're saying. They're saying they're going to ramp production. But I think fundamentally the issue is how big is the market they're going to get to, and how quickly can they make that market bigger. I mean, this is a car that costs, last quarter the analysts were saying it costs about $122,000 per vehicle. That's a limited market, and that's the market they're trying to sell into. Adding China will certainly help, but we, again, don't know how big that market's going to be over there either. Their hopes to sell 35,000 cars hasn't happened yet. And when you see down quarter-over-quarter results, while they say they're going to be ramping it up, isn't a positive sign.
Jared, how are the cars selling in the secondary market?
You know, we see strength there. We do see strength, but I think that's just a function of supply not meeting demand. We do see secondary market transaction prices being at or slightly higher than retail prices. But again, it's a very low volume in the secondary market, simply because there aren't a lot of vehicles out and available and being turned over.
And there's potential on China. I mean, is it real potential, Efraim, or is it just more talk?
There's real potential there. I mean, that's the biggest car market in the world, and it's, I believe, the biggest luxury market too, and that's where they really play to right now with the Model S is a luxury vehicle when you look at the prices there. I do see an opportunity in China, but there's a lot of issues in terms of their availability of production. You know, you got to feed different mouths. You got the U.S., you got Europe, and you have China to feed.
Well, it goes back to Matt's point about constraints.
I mean, we were just talking about LVS, right? I mean, people in China are spending money like there's absolutely no tomorrow. So they're going to be buying Teslas. They don't mind going to Sheldon Adelson's casino and dropping a couple $100,000. Why not buy an electric car? The only problems that Tesla has, which are good problems to have, they can't make enough to sell, right? They're just completely sold out. And then in China, the issue that you have, although I don't know on the luxury end that it matters so much, is that a lot of the cities are saying, look, we can't give you a license plate. There's just too many cars here already, and you can't even see your hand in front of your face. So you're probably going to die next week. It doesn't matter if you buy a car or not.
All right, Matt.
Can I?
Yeah, go ahead.
Real quick, their SG&A costs went way up. Their sales and general administration costs, A year ago, they were about $47 million in the quarter. This quarter, they were $118 million in the quarter. So as a percentage of revenues, it's nearly doubled year over year. So they're spending a lot more just to keep the business going and just to just to grow that business. But the revenues are not growing that much, and as we see, the car sales aren't growing, and despite that massive spending in selling costs.